Hi everyone, welcome to my MYSWEETLE. I'm Michael here. The Essays of Warren Buffett, and this is going to be the summary of the introduction. I'm happy that I'm reading this book and I've read half of it, and it's fairly hard for me to summarize this book. And I really would like to thank Lawrence for compiling and arranging the annual essays of Warren Buffett. You want to learn about business, learn from the best, and it's him, it's Warren Buffett. He has mentioned that he's a great investor because he's a great businessman. So it helps, and I found that it's fairly hard for me to summarize because almost every single sentence is valuable and meaningful. Let's get started. Okay. All right. The central theme uniting Buffett's lucid essays, fundamental business analysis, formulated by Ben Graham and David Dodd. Management principles, corporate managers as the stewards of invested capital, and shareholders as the suppliers and owners of capital. Buffett took over Berkshire in 1964, and the book value per share was at $19.46, and its intrinsic value per share far lower. Today, its book value per share is around $100,000 and its intrinsic value far higher. The growth rate during this period is 20% compounded annually. Berkshire is now a holding company engaged in 80 distinct business lines. Its other interests are so vast that, as Buffett writes, when you look at Berkshire, you are looking across corporate America. Buffett and Charlie Munger have built this by investing in businesses with excellent economic characteristics and run by outstanding managers. They prefer negotiated acquisitions of 100% of such a business at a fair price. They also take a double-barreled approach of buying on the open market less than 100% when they can do so at a pro rata price well below what it would take to buy 100%. Genius! These results follow not from any master plan but from focused investing, allocating capital by concentrating on businesses with outstanding economic characteristics and run by first-rate managers. His economic goal is long-term. Buffett forgoes expansion and sells equity only when it receives as much in value as it gives. Corporate governance. The best managers think like owners and they have shareholder interests at heart. The essays address some important governance problems. First, importance of forthrightness and candor in communication. They avoid making predictions. Next is to select people who are able, honest, and hardworking. CEO is important. CEO's performance is harder to measure. No one is senior to CEO, and board of directors can't serve that role. Outstanding CEOs do not need a lot of coaching from owners. Buffett believes that board should be small in size and composed mostly outside directors. The CEOs at Berkshire are given simple set of commands. Number 1, run the business as if they are sole owner. Number 2, it is the only asset they hold. 3, they can never sell it or merge it for 100 years. Finance and investing. In this chapter, modern finance theory can be misleading. To manage the risk of volatility, many professionals believe the risk is minimized when invested in a diversified group of stocks. Buffett believes that equating volatility with a risk is a gross distortion. Modern finance devotees are claiming that Buffett is just lucky. Buffett does not prescribe diversification. Keynes believes that an investor should concentrate in 2 or 3 businesses he knows something about and whose management is trustworthy. When you invest, you are an owner, so react like one. Graham mentioned that price is what you pay and value is what you get. They are not the same. He also mentioned about Mr. Market, who sometimes can get moody and offer prices lower than value. Another legacy from Graham is margin of safety. The price being paid must be lower than the value being delivered. Such a simple idea. Buffett invests in businesses run by people he trusts. Circle of competence, Mr. Market, and margin of safety. These are the 3 legs of Graham or Buffett's tool of intelligent investing. Investment alternatives. After explaining his preference for investing in productive assets, a series of essays addresses a wide range of alternatives. Common stock. There is a high cost in trading with fees to brokers and many others during the exchange process. Despite increasing intrinsic value, Berkshire has never effected a stock split or paid cash dividends for over 3 decades. Share repurchases is not the right model for the company. Munger and Buffett is clear on their message. Do not buy these securities unless you are prepared to hold them for the long term. Mergers and acquisitions. Buy portions of or all of businesses with excellent economic characteristics and run by trustworthy managers. Share as currency in an acquisition is a rare case due to size of the company. Finding value enhancing transactions requires concentration on opportunity cost. Buffett prefers to retain rather than sell to be the buyer of choice for attractive business sellers. Valuation and accounting. Buffett's toolkit is intrinsic value. Financial statements must be able to answer the company's worth, ability to meet future obligation, and how good the managers are doing in operating the business. Accounting goodwill is the amount of purchase price of business exceeds the fair value of assets acquired after deducting liabilities. Economic goodwill is combination of intangible assets like brand that can produce earnings in excess of average rates. Accounting shenanigans. Accounting can be manipulated. The quest for integrity in financial reporting is endless. Accounting policy. Accounting has inherent limits despite being essential. Financial information can be great use to investors. Decisions can be made based on earnings, owner earnings, and intrinsic value. Tax matters. There are tax advantages when it comes to long term investment. Buffett's death would have no effects for the holders but will be for him. Thanks a lot. And basically, this is a summary of the introduction of all the chapters in the book. And I'm going to go chapter by chapter of this book. So get ready for introduction and the prologue and the chapter 1 of this book. And yeah, see you all soon. Do like, do subscribe, do leave comment, do give a suggestion and input on how Buffett have changed your life. Can't wait to read more of his essays. So see you all again soon. Thanks a lot. Wish you my sweet luck.